Hey, it's Pete from the Small Business Resource Center and the Small Business Resource Center YouTube channel. I have this question that somebody asked me, and I thought I would put in a video to make it easy for everybody to understand because a lot of times at this particular time of the year, people are making money with either crypto or they're making money with stocks, and now they know they have to pay taxes or they believe they have to pay taxes. So these are the major questions. So if you make a profit off a tax at the end of the year, you have to realize that taxes can be due. So I'm going to go over crypto information, stock information, how to reduce your tax or eliminate it, and otherwise. So if you sell a stock or crypto, let's just say, and you have a $15,000 profit, and I'm saying this is information for right now, and I'll go over reasons why it could be different in the future. Keep that in mind. So if you hold a losing stock but do not sell it, it's an unrealized loss. So let's just say if you make $15,000, but on another stock you lose $15,000. If you do not sell the other stock, according to the IRS, you still made $15,000 because you sold the other stock at a profit, and this one is an unrealized loss. So you cannot offset unless you sell the other stock that you lost. If you sell the stock that you lost money on, then you'd have a net zero. So you have to keep that in mind. So the question is, can I just sell this other stock and now buy it back? So I don't have to pay any tax, but I still owe the stock I lost. Well, there's a rule called the wash sale rule, and that stock says you can't do that within 30 days because the IRS is recognizing the reason why you did that is just because you didn't want to pay tax. So if you wait 31 days, you can do that. If you do it in less than 30 days, they're not going to allow you to net zero. Just so we can explain that. So there's other strategies. First of all, what I just said, if you sell the loss, buy back in because you like the stock in 31 days, now you have no capital gain. So taxation on realized gains is something important, and there's a couple things we're going to go over. First is a short-term capital gain. If you had a stock or crypto for less than a year, you pay ordinary income tax. If you held it for a long time, more than a year, then you have a preferred rate, which is 0, 15, or 20%, depends on your income tax level. So if you reinvest a profit, then you can help defer some taxes. If you have a 401k or you have an IRA or a Roth IRA, you can actually put a certain amount of money. It changes every year. I think it's around $8,000 right now, and help reduce those taxes. And that goes into a savings account. But if you take those out in the future before you're retired, you would have a penalty, keep in mind. So there are tax strategies to offset those. And a qualified opportunity fund also can reduce those. And that would be real estate investments or a real Delaware real estate trust is also another one. It's not on, I didn't type that on here, but that's another one. So I hope that answered questions on capital gains with taxes. The other thing that I wanted to say that's very important, and I don't think it's going to be retroactive, by the way, is Trump had stated that he plans to have no capital gains on United States crypto companies. If he does that, I think crypto is going to go through the roof. I've not always been a big fan of crypto. Keep in mind, I'm just relaying information that is online. But the question is, will he make that retroactive? Probably not. He could do that, but still, that has to be voted on unless he does by executive order, an executive order, which would be pretty interesting. But let's see what happens here. Comment below with any questions. Let me know what questions you have. It's Pete from the Small Business Resource Center. Like, subscribe. Tell me what you're profiting on. Comment below. Have a great day. Bye.